Alright, so I'm going to look at incomplete records in this video. There are broadly two types of incomplete records questions that you can be asked, or two methods, I suppose, of answering them. So it is two different types of question. So you can get the control account method, also referred to as incomplete records A in some places. So on StudyClix and in other places, if you see incomplete records A, they're referring to the control account method. That's what I'm looking at today. There's also then incomplete records B is what you'll see it referred to as. That's the net worth method. Okay, and I'll do that another time. Okay, so today is incomplete records A, which is incomplete records using the control account method. All right. Incomplete records is kind of exactly as it sounds. It is a company has not kept complete accounting records, so they haven't been kind of keeping proper books of accounts or records in accordance with kind of double entry bookkeeping principles. So instead of getting a nice balanced trial balance and being asked to prepare a profit and loss and balance sheet, you'll get a kind of mix of pieces of information, and again you will have to prepare a profit and loss and balance sheet from that. Okay, so in a final accounts question, the accounts have been prepared properly, you get a trial balance, and then it's a matter of moving stuff to the profit and loss, the balance sheet from that. In a question like this, okay, so this is the higher level example I'm going to do, you get some information about the start of the year. So in this question, I'm told they bought a business at the very start of the year. I'm given some information about kind of assets and liabilities at the end of the year. During the year, then I'm given information about payments out of the bank account, lodgements into the bank account, payments with cash, some information here about a loan, some information about drawings, some information about rent and drawings. And from this, I need to do to get a profit and loss and a balance sheet. All right, so you're required to show with workings the trading profit and loss account for the year ended and the balance sheet. All right, so that's what I'm going to do. In the first video, I'm just going to do some, just going to do the workings for the question. So some of which you'll see in every single question, and you will have to do as a separate working because they're kind of long enough. Others you might get away with just kind of doing in brackets, maybe once you get to the P&L, if maybe all you have to adjust is one prepayment or one expense due or something like that. But I'll do all the kind of adjustments now, and then I'll do the profit and loss and balance sheet in separate videos. Okay, so my question is here, all right, on page 381. And at the start of the question, I am told that on the 1st of January, Jay Lambert purchased a business for $340,000, and here's all the assets and liabilities that he got. Okay, so what I'm going to do is add all the assets, take away the liabilities, compare that to what he bought it for, and if there's any sort of difference between what the business he purchased is worth and what he actually paid for it, as we've seen in some other questions, that's goodwill. Okay, so on the 1st of January, you're doing kind of a statement of capital here. You'll see the book kind of formally lays it out a bit more than I will. A statement of capital, I'll just kind of list assets, list liabilities. It's going to get me the same thing. Okay, so the assets then that he is getting are premises, stock, debtors, insurance prepaid, and that's it. Okay, so there's 4 assets list there that he is purchasing. So premises is 260, stock is 42,000, debtors is 32,000, insurance prepaid then is 1,200. So if you add those together, you get 335,200. Your liabilities then, there are 2 of them here that he's purchasing as part of this business, trade creditors and wages due. So the trade creditors are 31,800. The wages due are 2,300. If we add those, that is 34,100. And I'm going to take that away from assets and get 301,100. Okay, so the kind of, I suppose, net assets that he is purchasing are worth 301,100 euro. What does he pay for them? 340 grand. Okay, so the difference between what that business he purchases is worth and what he pays for it, that's goodwill. Okay, so he's kind of paying for the good name of the business, their kind of customer list, the fact that he's going to get kind of recurring sales from people who've been doing business with them for years, the kind of relationships with creditors and stuff like that. So so that's goodwill. So we just take the 340 that he pays away from the 301,100 that it's worth, and I get 38,900 goodwill. Okay, and that's what's going to go on the balance sheet as goodwill. Now, told then he doesn't keep a full set of records, and this is what I've got during the period. All right. So you're doing a trading profit and loss account. Okay, so you're doing the trading account. The sales and the purchases take a little bit of working out always. All right, so I'll call that working 1 for the goodwill. Working 2 then will be sales. All right, and he's going to have some credit sales and he's going to have some cash sales as well. All right, credit sales. How does he get those? So during the year, there's 57,800 lodged into his bank account from debtors. So that is debtors paying him for credit sales. All right. So that's credit sales. Kind of, that's money received for credit sales, 57,800 during the year. All right. However, at the start of the year, there were 32,000 debtors. Okay, so there was 32,000 there sitting at the start of the year from when someone else owned the business. The fact that it was when someone else owned the business isn't that important. What's important is it was sitting there at the start of the year. So these 32,000, they're sales made the previous period. So if they're kind of sitting there due at the start of the year, they must be for last year. So I'm going to take those away. All right, so I'm going to go take away 32,000. And then same then at the end of the year, there's debtors sitting there of 21,500. So that is 21,500 sales I must have made this year that I haven't been paid for yet. Okay, but the point is they are sales made this year, so I should add those on. All right. So your 57,800, take away your 32, plus your 21,500 is going to get you credit sales of 47,300. All right. I think the book lays that out kind of as a debtor's control account. If you prefer laying it out the way they've got it done there, you can. Okay. The ordinary level questions tend to explicitly ask for a debtor's control account and a creditor's control account, so you'd have to kind of. So that's it laid out as a control account getting the same answer. The higher level questions just ask you for the P&L and the balance sheet, so you can kind of lay this out and get this number however you like. All right. There's also going to be some cash sales. All right. The cash sales are not obvious maybe the first time you look at one of these questions, because you can kind of look up and down and you're not going to find them. All right. But what you are going to find is cash payments, but no cash receipts. Okay, so there's money being paid out in cash, like general expenses 35,700, purchases 78,000. So this is money being paid out in cash. So if money is being paid out in cash, money must be received in cash as well. Okay. That money received in cash is not given to us in the question, okay? So it's like the missing figure, and it is the cash sales that you have made, Okay, so one thing just to be careful of here, this lodgements figure of 125 grand, that's down as cash payments because that is you taking money that you have received and then lodging it in your bank account. So you'll kind of see the same amount going into your bank. So this 125 grand, this is you just moving money around. Okay, so you have received cash, which is cash sales, you pay some general expenses from it, you pay purchases from it, you pay some other stuff from it. You're left then with around, well, not left to it because I'll probably have cash at the end of the year as well, but we've got 125 grand, which we decide instead of having sitting there in cash, we'll lodge into our bank account. Okay, so just be aware that lodgements of 125 grand is not cash receipts. Okay, it's you lodging or moving money from cash into bank. Okay, so look, the cash sales, you can kind of figure it out in a bracket like this. I will just kind of lay it out as a T account in this one, and then I'll talk to you about how else you might figure it out. Okay, so cash account. Okay, and just kind of a rough T account here. So cash account is an asset account. Okay, so receipts would be over on this side, and payments will be over on this side. So money in, money out. What do I know? Okay, so I know 125 grand came out of cash. It was lodged into my bank. So that is a payment, as I said. So lodgements, 125,000. General expenses, 35,700. Purchases, 78,000. So they were all paid with cash. Okay, let's look where else. So Lambert took €90 cash per week for household expenses during the year. Okay, so that's drawings. Okay, and it's cash that's been taken out of the business. So Lambert takes, so you can call this household expenses or you can call it drawings. So he takes €90 a week for the full year. So €90 by 52 weeks is 4,680. There's no other cash payments mentioned down here. You just need to watch for cash balance at the end of 980. Okay, so a cash balance, when you're going to do your balance CD, will be here, and then it will be brought down to the other side, but the balance CD would go in here, the closing balance 980. Okay, so you have all these payments, and then you have this money sitting there at the end of the year, and if you were to add those up, you'd get 244,360. So the company spent around about 244 grand and had 980 left over at the end of the year. Where did all that cash come from? There's no mention of cash being there at the start. There's no mention of cash coming into the business any other way. So that must be cash sales. That's where that money is coming from. So this side over here must add 244,360, and the missing figure, the plug figure here, is cash sales. Okay, so 244,360. All right, so that's where your cash sales come from. All right, what I said you can kind of do it in brackets here is because it tends to just be all the cash payments added together plus the closing balance. Take away any cash receipts that maybe are mentioned in the question. What can be quite common is you'll sometimes have a cash balance being purchased at the start of the year. So if there's a cash balance mentioned in what you get when you purchase that company, that would be subtracted at the end. Okay, so another way of getting this cash figure is just to add all the cash payments together and then subtract any opening balance. There's none here. Okay, so if I was to add all these together, maybe in a bracket here under cash sales, I would get the 244,360. So you can do it as kind of a T account like this, or you can deal with it, as I say, the same way I kind of did this one here. So just adding these numbers together. But any way you do it, just once you get it right, 244,360 then is your cash sales. So then those two numbers added together are 291,660. So that's the sales number that's going to go into my profit and loss account. All right. I'll have to do something similar with purchases then. This one's a little bit easier because the cash purchases are way easier. So your working three here is going to be to work out purchases. And like I said, the cash ones, that's just the 78. Okay, so cash payments for purchases, 78 grand. Okay, so the cash purchases are just 78,000. The credit ones then, so what bank payments? So there was 54,000 paid to creditors during the year. So that must be for credit purchases. So if you're paying money to creditors, it must be to pay them for purchases you made on credit. However, are there any credit? Yeah, so at the start of the year though, there was 31,800 in creditors. Okay, so some of this 54 that you're paying during the year is paying for last year's purchases. They don't belong in this year's accounts, so you're taking that 31,800 away. And then end of the period then, I owe 17,900. If that is sitting there owed at the end of the period, I obviously haven't paid that money yet. Okay, so that must be purchases for this year. So add that 17,900 on. All right. So I'll do that. Yeah, I'll do that first. So if I add those together, I am going to get, see, so credit purchases, 54,000 plus 17,900, take away 31,800 is 40,100. So adding those together is 118,100. And just one thing that comes up a lot on purchases, so just be watching out for it here, okay? So Lambert took goods from stock to the value of €120 per week for household expenses during the year. So some of the purchases that I made were not then resold. Okay, so purchases is only stuff you buy to resell for your business. If some of the purchases then are just been taken out of stock and used for his own use, you should take those out of purchases. Okay, so just take away the drawings. So that is 120 a week for 52 weeks. So 120 by 52 is 6,240. And subtract those from each other and it's 111,860. Okay, like a lot of the questions, a lot of the same stuff comes up again and again, so you'll be kind of looking out for the likes of drawings there as you work through the questions. All right, as like you're kind of, you won't notice them as quick the first time you're looking through one, but after you've done a few, you're going to know what to look out for. So 111,860. That's what's going to go into my profit and loss account or into my trading account as purchases. All right. Something else I always need to do is the bank account. So you will see down here, so included in the assets and liabilities of the firm at the end of the year, they don't give me the bank account, the bank balance at the end of the period. So I'm going to need to figure that out. Okay. So, I mean, I'm going to lay this out as a T account. You could just do it as add all the lodgements together, take away all the payments, and that'll give you the closing balance. But I will lay it out as a T account. So, so like the cash account, it is it's an asset account, and receipts will be over here, and payments will be over here. Okay, so what receipts or lodgements do I have into the bank account? Well, I've got debtors of 57,800. They're going to mostly come from here, but we have a few that we tend to need to just look out for down here. So debtors 57,800. Cash Okay, so that's going to be included in your closing bank balance, so it does go in here on the receipts side. Okay, it is money, it's moved around from your cash into here, but it does go into here into your bank account. And then you're receiving dividends of 6,500. The payments then, so some of these payments are going to, this is where we're going to get a lot of our expenses from when we come to the profit and loss account. Some of them, like we see here, there's motor vans, computers and equipment. Some of them are the purchase of fixed assets, so they're not expenses. But regardless of whether they're revenue, they're expenses, or they're capital, like the fixed assets, they are still payments. They are still money out in coming up with my closing bank balance. So they're all going to go here on the payment side. So I'm just going to take all of these then. So motor vans, creditors, light and heat. Like, I'll have to adjust a lot of these later for prepayments and expenses due and stuff like that, for going into the profit and loss. But for now, I'm just taking in what was actually paid during the year. So interest, insurance, the covenant for charitable organizations. That's just a charitable donation. Covenant, computers and equipment, rent. So it's just everything here from the payments. So 32,000, 54,000, 8,600, 1,800, 2,400, 6,400, 39,000, and 6,000. Okay, so that's all the payments there, from the bank payments. Now, these are about cash, don't need to worry about these. Just this one here is going to give me something else. So Lambert borrowed 120 grand on the 1st of July from ZY Finance Limited, part of which was used to purchase an adjoining building costing 95 grand. It was agreed to be repaid. But he borrowed 120 grand. So if he borrows money, he gets that money. He receives that 120,000 euro. Okay, so that's going to be a receipt. All right, so he actually receives the 120,000 loan. So that goes into his bank account. So that needs to go in on the receipts or the lodgement side, on the debit side of the bank account. Same adjustment. I'm told he uses 95 of that to purchase a building. So he purchases a building. That is an outflow of cash. So that's a payment. So buildings, 95,000 goes over there. All right. There's nothing here, and then this is all just prepayment, or sorry, expenses due and assets and liabilities at the end of the year. So that's not a concern of mine here. So that is everything then, I think. Yeah, okay, so that's all my receipts and payments. So the bulk of them from here, but just getting a couple from the loan note here. Just be careful. Just look out for any bank balance that you might. The company, when you purchase it, might have a bank balance that you're taking over. That would go in the asset side. It's not here, okay? But you might have an opening bank balance if, as I said, you purchase this company with a kind of bank balance sitting there. All right. So all you're going to do is just balance this account. So just total both sides, and I think it's 309,300 on this side is the bigger. So just total this, then take it away from 309,300, and it gives you a balance of 64,100. All right, so there's my closing bank balance. Okay, I would tend to do that one as a T account like that. Okay, to get your 64,100. All right, but it's going to look, it's following the cash account. So wherever you do a cash account, you can do the bank account the same way. Okay, I'll leave it up to you. But as I said, I prefer to do a T account for that one. So that's my closing bank balance. So when I come to the balance sheet, that's what's going to go in as my bank balance. So it's just not given to me there. But I know from the bank payments and the bank lodgements, there must be a bank balance at the end of the year. All right. What else then do I have to adjust? All right. Well, I saw the loan note here, so why don't I deal with that? So what's happening here? So he borrowed €1,200. It was agreed that the amount borrowed will be repaid in 12 equal installments on the 1st of March each year, beginning next year. So you see something small with that. And then interest is to be charged at the rate of 5% per annum on the initial sum and paid monthly at the end of each month. Okay, so the interest is 5% of just the initial amount. Okay, so loan interest is going to be the 120 he borrows by 5%, and that is 6,000. But then he only has the loan from the 1st of July. Okay, so he's paying it monthly, end of the month from the 1st of July, so that's 6 months. So loan interest should be 3,000. A typical adjustment here, he's paid 1,800 of it. Okay, so loan interest for the year is 3,000. That's what should go in the P&L. But what's actually paid is 1,800. So you're going to have loan interest due on your balance sheet. So you can start putting your notes here like balance sheet, current liabilities, P&L, etc. As you're going through this, if you like. So that's loan interest due of €1,200. Just the other thing, so something we don't see too often, or we might see it occasionally, and we see it so infrequently that it throws us, I think, when we do see it. So just normally we put a loan down in long-term liabilities, down in financed by, we're going to pay it after a year, 120 grand. Just the way this is phrased, I'm going to pay it in 12 equal installments. So I'm going to pay 120 grand divided by 12 is 10,000. So I'm going to pay 10,000 a year for 12 years. And the first one is going to be paid on the 1st of March next year. Okay, if I'm doing the balance sheet for the 31st of December 2021, and I'm making a payment on the 1st of March 2022, that's due within 1 year. Okay, so just my 120,000 loan, 10,000 of that is going in creditors due within 1 year, and 110,000 is going in creditors due after 1 year. Okay, really easy to miss and just put all 120 grand in the long-term liabilities, because that's generally what we do. But just they're telling us that we're going to pay 10 grand of it within 1 year, so put 10 grand of it up in the creditors due within 1 year, and then the 110 grand what's going to be paid after a year down in the finance by in the long-term liabilities. Now, other workings here. These are, so a lot of these will be just kind of your expense ones. So you might get away with doing some of these just kind of on the face of the P&L, like kind of in brackets. But I'll just do them out separately. And then we'll kind of we'll slot them down into the P&L and balance sheet as we come to it. Okay, so I will just pause here briefly, and I'll come back to those kind of expense adjustments in the next video.